Good morning, everybody, and Good Friday. It's March 25th. It's Good Friday, holiday in many countries over the world, but Forex markets are still open, and we are here. I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. As usual, we'll cover recent developments, charts and levels, the next 24 hours, which are relatively thin. But as usual on Friday, we'll also do a preview for next week's events. And of course, your questions are welcome as usual. I see a few of you that are not on vacation and are in the room. So good morning, and good morning, Fabian. And if you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. Let's begin from yesterday's events. And yesterday was quite a busy day. So beginning my chronological order, UK retail sales beat expectations. This time, they didn't only beat expectations and have an impact on the short term. This gave the pound the necessary excuse or fuel or whatever you want to call it to stage quite a nice recovery. It was later, the cable later got another boost from weak US figures. Eurozone TLTRO was quite small. Maybe that's one of the reasons that the euro was a bit stuck, but that's not the only one. The big news from yesterday was the durable goods orders in the United States missed expectations, okay? So perhaps in the headline we had a small beat, but it was still a fall. And if we look at, we had downwards revisions for last month. Last month was not as great as initially reported. And perhaps the most important figure is the core durable goods orders, what reflects investment, and that was down 1%, 5 times more than expectations for a small drop of 0.2. And this reflects soft investment as the Fed stated in the statement. So that sort of took out the steam out of the US dollar rally, halted the gains. It was a significant release, top tier figure, and a significant miss. Okay, so durable goods orders halted the rally of the US dollar. In addition, we had jobless claims, which were as expected and remained at low levels, 265, and market services PMI. This was good news. It did not meet expectations, but it came out above 50 points. That means it returned from the abyss of under 50 points, reflecting contraction, to above 50 points, reflecting small growth. So it was a bit of good news. But remember, the biggest release yesterday, the most important one, was the durable goods orders, and that halted the dollar's rise. Another figure we had yesterday, overnight, is the Japanese inflation figures. They came out, a bit worse than expected, but apart from the Bank of Japan's very specific inflation figure, which showed stability in their core inflation figure at 1.1%, under the 2% they're aiming for, but not as terrible as the other official CPI, such as the national and the Tokyo one. Good morning, Sinatra. Good morning, Fabian. Good to have a few of the regular guys here on board on this day of thin liquidity and vacation in many places, but not everywhere. Okay, so so these were the figures we had yesterday. Let's look at the charts. So let's begin with euro-dollar. Euro-dollar more or less is stuck in range. Okay, it's become entrenched in a more narrow range. 111.60 at the moment, a bit sliding this morning, but the moves are not big. As you can see, we have a range of 30 pips, which is not too shabby for a day when many traders are on vacation, but still relatively limited. Okay, I've added this line of support, 111.40, because that's the low point we reached this week, and the highs were 111.90 more or less. So this is the narrow range we are currently in. More important lines to watch are 112.15 and 110.70. Okay. Question here. It's a bank holiday here, but how could I miss your show? Where is it on? Yeah, thank you very much. The show is on as usual. You can't see you can't hear what I'm saying. Anyway, the show is broadcast as usual on the FX Street website. So you should be able to see it. Anyway, what I was talking about, euro dollar. Why can't I find the link on FX Street? Anyway, we're still on FX Street webinars. Or FX Street YouTube channel. Anyway, let's continue. So euro dollar 111.60, more or less stuck in range. Didn't really enjoy the weakness of the US dollar yesterday, or the halt of the rally. A currency that did manage to bounce back up. Okay. Okay. Thanks. Okay, I didn't understand. Anyway, good to have you here. Good to have everybody here this morning. Let's continue. We did see the pound manage to recover. It found support very nicely there at the support line of 140.50. Went all the way up to 141.80, just a bit above the line I marked at 141.75. So very nice technical behavior from pound dollar. Okay. And then, well, we're sliding back down, but still in a very narrow range. The pound enjoyed the stronger than expected retail sales. That's, of course, good news in the UK, and also the weakness of the US dollar following the durable goods orders. 140.50 is even stronger now as support, and 141.75, I still see it as resistance. Look how nicely 140.50 worked, well, at least twice here and here as support. So the pound is still giving a fight. This week the pound was hit by the Brussels bombings, the rising chances of a Brexit following the tragic events in the capital of Belgium and the European Union. Okay, dollar yen currently flirting with 113. It already reached higher ground yesterday on this risk-off sentiment, if you wish. Now it's back to the previous range, more or less. 112.20 remains support. The figures from Japan did have some impact, did strengthen the yen a bit, but it didn't go too far. Okay. Dollar CAD was a big loser mostly yesterday. Mostly on Wednesday, due to the rise in crude oil inventories, distillates, gasoline. Basically, the rise, the comeback of production in the US as a response to higher prices of oil. So dollar CAD made a break to the upside, found resistance at 133. Now it's with the halt of the US with the US dollar, it's back to somewhat lower ground, 132.40. I still see 131.70 as support. Perhaps this line is a bit less relevant, but 133 to 131.70 is the current range for dollar CAD. We could see, of course, a narrow range today on thinner liquidity. Aussie dollar, also took advantage of this weakness of the US dollar on the durable figures and bounced back to the high range. 75.27 is the current level. 75 works as support. 75.40 as resistance. It already fell to support. No, it fell to 74.80. Didn't really go too far. But anyway, also here, Australian dollar enjoys the weakness of the US dollar. Nothing came out of Australia yesterday. Kiwi dollar is battling the 67 line. Also, the Kiwi Kiwi managed to partially recover, but movements here are quite narrow. This morning we're seeing Kiwi move a bit higher, but nothing really significant. Dollar Swiss, as we've seen with other currency pairs, well, this one is a bit more stuck in range. Managed to climb above 97.50, but shy of the 98 figure. The range is narrow. Euro Swiss currently at 109.08. Found support there at 108.80 for a few days. Very narrow range here as well. Euro Pound, well, the recovery of the pound yesterday allowed the pair to slide back down. Okay, I think we can mark here another line of support, at least for now, at, right here, at 78.80. We had a break above 79.30. We reached the highest levels since December of 2014, but now we're back to the previous range and this comeback of the pound, and with the euro reacting, not reacting just a bit. So euro yen, well, here it is in the range between 125 and 127. Relatively narrow moves here, a bit higher within this range. And pound yen managed to recover very nicely from the 158.50 level, and managed to peak even above 160, but didn't go too far. It's a bit choppy here, a bit messy, but we are seeing here the recovery of the British pound thanks to retail sales and perhaps also the fading out low attention span regarding the Brussels bombings and the Brexit. Now we're back above support at 158.50, closer to the higher end of this range. And last but not least, let's talk about oil prices. Also here we see the change in trend, at least for now. We've seen oil prices gaining ground under fallen crude oil inventories on the dovish Fed last week, got close to $42 in WTI crude oil. And then this week we had hawkish comments from Fed officials, stronger US dollar, drop in oil inventories, a rise in oil inventories, which everything went against oil prices. We dipped all the way to, well, 38. Let's adjust it here, 38.30. But with this weakness of the US dollar once again, hopes of more looser Fed policy, we're seeing oil prices not able to climb back above 40, but get close to this level. The battle is on. So we did see some kind of a change in trend in the last almost 24 hours, I would say, in the last 20 hours since the release of durable goods orders. In the past 2 weeks, US releases came out early for us here in Europe because they shifted the clocks. We're going to have a clock shift to daylight savings time this weekend here also in Europe, in the UK. Going to get back to the normal trading hours. Anyway, yeah, so that's it for the regular roundup of news. Charts. Any questions? Let's talk about what's going on today. So today it's a day of very thin liquidity. We have one event on the agenda. One meaningful event. We have the final release of GDP for the third quarter. Let's just see what else we have. First of all, this is for FX Read Calendar and Forex Crunch. We have a long list of countries on vacation: Germany, Spain, New Zealand, Switzerland, Canada, and Australia. So the UK and the US are not on vacation. Also France, we had figures from France. Consumer confidence sliding a bit, and GDP, it's the final read, no surprises, 0.3. Now for the main dish for the day, GDP in the United States of America. Most importantly, well, as usual, the headline figure. We're expecting a small slide from 1% to 0.9. These are annualized figures. That means it's not, the economy didn't grow by 1% in the fourth quarter, but a bit closer to 0.25, a quarter of a percent, quarter over quarter, but the figures are multiplied by 4 to get an annualized figure. That's how things work in the US. Anyway, we're expecting a small downgrade to 0.9. Revisions are very common in GDP in the US, so it can certainly move markets. Oh, why is this? Sorry, I was looking at the wrong figure, but it's basically the same. It's the price index. So actually, sorry for my mistake, we're actually expecting no change, still 1% on GDP. Price index is expected to slide just a bit. Also an interesting figure here, the personal consumption expenditure. It's the Fed's preferred measure of inflation, but when it's the monthly release, not the quarterly release, not the one that comes with GDP today, it's still of importance, but the headline figure, this one, is the most important one. Okay, for the Fed also, this one is important, but again, on the monthly figure. What's important to note, a few things. on this, on GDP? Well, first of all, it is important because it's the broadest measure of the economy, gross domestic product, sort of the bottom line of everything. Second thing, I mentioned revisions are quite common in the United States. And even though this is the third release and it's named the final one, we always have further revisions later on. We have annual revisions in July, for example, which can change all the figures of the past year or two. So always take these things with a grain of salt. Also, these figures are not always a bit controversial if GDP is the best measure of the economy, but they're very closely watched. It does for markets, it's still important. The third release has usually less impact than the first release, but if we have a significant revision, and that's quite common, it could have a significant impact. Another thing is thin liquidity. Okay, it's Easter holiday in many places over the world, not in the UK, not in the US. I mean, not in France. Markets are still moving, but liquidity is thin. You know what they say about Forex trading is like air traffic control. When we have no movements, hours long, extremely long hours of boredom, and then a few minutes of sheer panic when planes need to land at the same time. So this could be the same thing here today with Forex, with the GDP release, long hours of nothing happening. And then when the figure is out, if there is a significant surprise, any small order in markets can make quite a big move. Okay, so we have to take that into account. The time of the release is 12:30 GMT. That's 12:30 in London, 1:30 in Central European time, 8:30 in the United States. So you could have quite a lot of action on this release. I remember, I think last year, we had absolutely nothing on Good Friday. The date was different. Of course, the date changes every year, but this time we do have one significant event, and it could certainly move markets. Okay. Any questions at this point? Will you be doing the show on Monday? Yes, I will be here on Monday, doing the show as usual. So stay tuned, as they say. Another thing I wanted to show you is well, I like to show it many times. It's the CME Group Fed Watch. It's the implied probability of a rate hike. We had, before the Fed decision, the implied probability for a hike in June was around 50%, even more. It fell, that means to around 40% after the Fed went extremely dovish. And then after this durable goods orders, it fell once again. Now it's about 42%. And you can see here, it's about 60%, 58.6 against a rate hike. It will stay the same. And if you aggregate both these figures, it's around 42 for rate hike. In April, which is the next meeting, basically bond markets are telling us very low chance of rate hike, around 12%. We did hear from a few Fed speakers that this week that April is a live meeting, not only live meeting, but perhaps we'll raise even rates in April. I don't think that's possible. Markets don't think it's possible. And then we had this bad figure yesterday, and we have, of course, more figures until the decision. The decision comes on April 27th, so there's still a full month. This includes the non-farm payrolls that comes out next week, and the first GDP release for Q1, which also comes around the time of the decision. I comment here from Sinatra, I do not expect too much difference between the consensus and the actual GDP. Did I miss anything in the US data? No, you didn't miss anything. Well, first of all, it wasn't released yet. It's released today. So we're expecting, the consensus is for no change, a repeat of last time. If I repeat for it, I mean, the third release is expected to show the same 1% annualized growth rate like the second release. Between the first release and the second release, there was a change of 0.3, if I'm not mistaken. It rose from 0.7 to 1%, better than expected at 0.4. Yeah, here we have the previous one. Okay, so last time the first release showed a growth rate of 0.7 year over year, and then the consensus was for 0.4, and the actual came out better than expected, and it sort of raised expectations also for this time for 1%. Another thing to note in this GDP that I should talk about is that it's not only important to have the bottom line figure. Okay, I mean, of course, the bottom line figure, headline figure, if you wish, is the most important part of the release. But what you don't see here on the calendar, and you have to read through the news, is, of course, the headline figure has the biggest significance, but what's the composition? What are the internal factors of the GDP release? In this case, we're looking for changes in the internal factors. Good growth comes from exports, naturally, comes from investment, which the Fed described as soft. It actually described also exports as soft. These are the best parts of growth, because when you have more investment, it implies future growth. When you have more exports, it's also important because the world is buying from the United States in this case, and the global economy is also doing better. And of course, in the United States, private consumption is also considered good growth. So if growth is driven by these factors, it's all good. What's the bad growth? Okay, government spending, always frowned upon. Well, and it makes sense, especially when it's spending on the military abroad. But also inventories. What's wrong with inventories? In theory, nothing is wrong with inventories, but when you have growth that is based on replenishing, on building the inventories, that means that in the following quarter or 2 quarters, we'll have a depletion of these inventories, okay? So this is a pendulum swing. And if you have growth dragged down by depletion of your inventories, it's not too bad, okay? That means that in the next quarter, we could have them filled up, okay? There are always these silver linings or caveats, depending on what happens, depending on how you want to see things. But if you have strong growth that is based on inventories, it's not as good as strong growth based on other things. And if you have weak growth, but that's because of weak inventories, if a drop in inventories, then it's not too shabby, okay? In this case, it's the third release. So changes are what are more important than the actual figures, because we already had the previous ones. So if we have a rise in inventories in comparison to the previous release, it's not really good news, and a drawdown in inventories is not really bad news. Okay, so yeah, and we have a question here. A measure of GDP varies country by country, so how can the market really react to the figure? Because you can't compare eggs for eggs. I take no notice because even on final GDP, it's revised again. Who are they kidding? They can't get figures right for the first time, so it's micromanaged. The market reactions with their vision. Yeah, countries measure GDP in different manners, and the releases are also different. So when you see, for instance, in the UK, they look at quarter over quarter, also in Europe. And the secondary figure is the year over year figure. In the US, it's annualized. It's taking the quarter by quarter and multiplying it. In other countries, for instance, in China, they look at the year-over-year figure. So that's even not the calculation. That's how you present it to markets. So you can see growth rate. If we see growth rate in the UK at 1%, it's excellent news because it's a very high quarter-over-quarter growth rate. When you see 1% in the US, it's annualized. It's poor growth. Okay. When you see and that's how it's presented. Now, of course, these things are measured differently. For instance, here in Spain, a few years ago, they added illegal activities such as drugs and prostitution to the GDP measures. Now, if that's illegal activity, which is undocumented because it's illegal, how can they measure it accurately? Okay, so yeah, you can't compare eggs to eggs, as you say. You can compare expectations via surprises or disappointments. That is of importance, okay? And so that's what makes a difference for markets. Yeah, I think it's not only in Spain. I think it was made also in other countries, this inclusion of illegal activity, but I'm not sure. I remember for certain that was it came about here. Yeah, figures are revised again and again. So yeah, there's a lot of criticism about these revisions. In China, there are never any revisions. It's released once, about 3 weeks into the new quarter, and it's the final read for a huge country. Also, of course, very suspicious. But also the figures released in Western countries, they can be suspected. They're based on surveys, based on what's chosen for as GDP as activity and what isn't. It's hard to measure every kind of activity. Okay, you don't have an accurate measure of the black market. So these figures are quite controversial. In addition, what does growth mean for the individual? I mean, if you look here at growth figures in Spain, they're really good. Year over year, about 3.5%. Nice growth rates quarter over quarter, 0.8. Better than the United States, better than Germany, right? But remember that it's real GDP, and real GDP is based on inflation. And here in Spain, for example, prices have fallen so much, deflation has been so stark that the nominal GDP didn't grow so much, it grew just a bit. So it's also problematic. What other? And in addition, you can say, okay, a country has a poor growth rate, but people are living off quite well. They're quite happy. In some countries, they wanted to introduce this happiness index, which is even harder to measure. I don't know if it's better than GDP or things like, I think it's more relevant to look at either income per capita, how much the country makes per person, or basically, well, standard of living is what's important for me. I think what's important for many people. If the median salary can buy you a certain basket of goods, and then next year it can buy more, and then or less, that's, I think, more important. Anyway, these are huge. There are huge discussions in academia about GDP. Okay. They should include that. Position should be a commodity. Yeah. In the US, at least in Colorado and in Washington State, marijuana is legal. Well, mostly legal. So I believe it kind of goes into GDP reads. Prostitution, I'm not sure. Anyway, of course, there are many other more normal black market activities, such as not printing an invoice, which things that are not fully measured. Okay, let's take another look at the chart and see if we have any movement this morning, or we have the air traffic controller phenomenon. Yeah, when I began talking, it was 111.60. Now it's 111.64. Yeah. Anyway, movements are limited. Also on dollar CAD, oil prices are stuck a bit as well. I do believe we'll have more activity in the US session, not because of GDP, but not only because of that. Okay. All right. Any more questions? Next week we have the final UK GDP. In the UK, the revisions are very minimal, but that means that every revision is a big deal. And we're finishing a full quarter next week. As usual, on Friday, we'll do a preview for next week's events. Okay. I'll begin the wrap up in a few minutes, and then we'll do the preview. And these videos will be available also separately on FX Rate and on Forex Crunch. Pairs to watch for today. Well, the only release comes from the United States. So it's the dollar versus the world. What currencies should we be looking at? Perhaps dollar yen reacts in the best manner and it's not stuck like euro dollar. So if we have a surprise to the upside or to the downside, it could be the it could have the biggest impact here. I guess also euro dollar, basically major pairs. I would look more at major pairs and less at commodity currencies today. But yeah. Comment here from Fabian. Yohay, why don't you do a review of Q1 and an outlook of expectations from Q2 and Forex Crunch? That would be great. Yeah, great read. Yeah, I have too many things to do. Thanks for the advice. Yeah, I'm sure that would be of interest. Let's see if I can squeeze that in. I don't promise. What I will surely do is the updated list of the 5 most predictable currencies. And I'll be sending it out to readers next week. Hopefully next week. Hopefully I'll get it done properly. But also your idea for review of Q1, I think more interestingly would be a preview for Q2, forward-looking rather than looking to the past. But, well, can't build the future on thin air. Need to look at the past as well. Anyway, in Q2, I can already say that the big events, that we have quite a few political events in Q2. The Brexit referendum, should I stay or should I go, on June 23rd. And because it comes at the end of the quarter, it's very meaningful throughout the quarter. Political developments could happen also here in Spain. What's important for markets? US primaries are going on. And for markets, of course, we have the regular, we have another ECB decision in mid-April, Fed decision at the end of April, fresh GDP figures at the end of April. What else? And the June meeting of the Fed, of course, is important. These are sort of the most important things that come to mind. In Q2, we always have the regular figures, the non-farm payrolls, the beginning of every month, and things like that. Yeah. Any feedback, of course, on the show is welcome. You know, Fabian, you offered to do a review of the week. I didn't prepare it for this time. It was also a light week, but I'll try to do it next week. Okay, so have not only a preview, but also a review. I guess a review would be interesting on Friday, and a preview would be interesting on a Sunday, right? Yeah, okay, you know what? Let's begin with the wrap-up for today, and then reach the preview for next week. Thank you, that would be great. Also, your review for the week. Yeah, thanks. Okay. So this is the wrap up for the live market open for Friday. It's actually Good Friday, March 25th. Today we have thin liquidity and only one event, but we did have quite a few developments yesterday that still move markets. A better mood in markets, higher oil prices, they recovered from the lows, but the euro is a bit stuck. Yesterday we had a big bounce in the pound thanks to the fading out of the Brussels bombings that imply higher chances of a Brexit. Better than expected UK retail sales, and of course the weakness of the US dollar. TLTRO in the Eurozone was small, wasn't that important because we have new TLTROs coming and more money printing from the almighty ECB. Durables goods orders in the United States came out weaker than expected. Most importantly, core orders dropped 1%. Revisions were to the downside. This tells us that there is softer investment. The Fed is vindicated in the statement from last week. Okay, but maybe they knew it. Anyway, it halted the dollar's advance. Other figures in the US were okay. Jobless claims remained at low levels, which is good news. Market services PMI came out as expected and it went back to growth territory. And overnight, we had Japanese inflation miss, according to the national and Tokyo figures, but according to the BOJ's very special inflation figure, everything is okay at 1.1%. Currencies. So euro dollar, very limited range, 111.40 to 111.90, and even narrow range at the moment. Bigger lines to watch in this grind down of euro dollar. 110.70 and 112.50. Pound dollar, very nice recovery, very nice bounce. Double bottom 140.50, the high 141.75. Dollar yen battling the 113 level, supported 112 resistance. 112.20 resistance at 114. Dollar CAD, well, dollar and the Canadian dollar suffered the fall in oil prices, but it managed to recover. Dollar CAD fell from resistance at 133, currently 132.35, support at 131.70. As you can see, ranges are quite narrow. 75.30 on Aussie dollar, support, well, limited support there at 75, resistance at 75.40. Kiwi dollar battling the 67 level, very, very stable. Resistance 68.20, support at 66.20. Number 20 is significant. Today we have one event on the agenda, and it could be a big market mover, the third and final release of GDP in the United States of America. It's expected to remain unchanged at 1% annualized growth. Watch out for any revision. It could be significant. These things happen. Watch out for the composition of GDP. It could be to the upside. Could show bigger inventories, which is not good enough, but better consumption is good news. It's a sort of a summary. Let's see if we see changes. Remember that the Fed talked about investment and export as soft. Let's see what's going on over there. We could have the air traffic control phenomenon that will have hours of boredom and then boom, a big excitement to end the week. Okay, so all in all, stable markets, thin liquidity. The dollar's rally, which we've seen throughout the week, the recovery, thanks to the hawkish comments from quite a few Fed members, this more or less halted yesterday with the poor figure from the United States, the durable goods orders. Okay, GDP will set the final tone into this long weekend in many areas. Okay, so that's the wrap up for today. And now this is the preview for the week that begins on Monday, March 28th, and ends on April Fool's Day on April 1st. So on Monday, many countries will still be in holiday, but we still have releases from the United States once again. Most important one that I'm looking at is the US Core PCE Price Index. A mouthful, but very important. It's the Fed's favorite. It's the Fed's favorite inflation figure. Watch out for the year-over-year one. If it rises, good news. If it stands in place under 2%, if it's at 1.3, it could be an issue. We'll talk about that, of course, on Monday. On Tuesday, we have the US Consumer Confidence from the Conference Board from CB. And more importantly, we have a speech by Janet Yellen. She will be talking about monetary policy, okay, at the New York Club. This could be important. I hope she will not try to put us to sleep. She could clarify the contradiction between the dovish Fed statement, which hurt the dollar, and the hawkish comments that came afterwards. I expect her to be dovish, but let's see. We'll talk about that, of course, in due time as well. Wednesday, we have quite a few figures. German CPI throughout the morning, released from the various German states, and ADP non-farm payrolls coming out this time before the end of the month, still working as a preview for the NFP on Friday. Always important. And oil inventories, as we've seen this week, it was a market mover, especially for CAD, but not only for CAD. Thursday, we have a speech by Mark Carney, the governor of the Bank of England. Let's see if he moves the pound, warns about Brexit or something like that. We have the Eurozone CPI always coming one day after the German figures. Should be interesting as well to shape the next ECB expectations. And GDP from Canada. Well, at the end of the month, as usual, it's a monthly figure. And on Friday, we hit the first day of the new month. Let's see if hopefully we're not fooled by April's fool. Chinese PMIs and US non-farm payrolls, both are wild cards. Chinese PMIs, we have both the official and the independent one for the manufacturing sector. And the US non-farm payrolls, I don't think we already have expectations for that. As usual, we're expecting, in general, we're expecting still no figures here on this calendar. Anyway, we're expecting what we've seen in recent months is a nice rise in jobs, but wages are stuck behind. Lots of work, no pay, as they say. Okay, so that's also the wrap up. That's the preview for next week's events. I'm sure it'll be busy even more than this week in terms of economic indicators. It's certainly a busy one. Beginning slowly on Monday. Well, even Mondays, which aren't holidays anywhere, begin slowly, and then it builds up towards the non-farm payrolls, the end of the quarter, the beginning of a new one. Okay, see here last comments. Thank you that you remembered. Banging job, Yohay, as usual. Have a great weekend. Thank you very much for the very kind words. It really makes me happy. I'm also very glad to see that many of you came to the show on a day which is holiday in many places, and also on Monday we'll be here. If we look at the Easter holiday here in Spain, for example, Friday is a holiday everywhere, but in some regions, in some cities, Thursday is a holiday, in some it isn't, in some cities Monday is a holiday, in some it isn't, so it's it can always be complicated here. Anyway, today is Good Friday, and I hope we have a good day in the markets. So thank you. Yeah, I'll be here on Monday. So thank you very much, everybody, for coming. Thank you very much for the kind words. And that's it. So have a great weekend, and see you. Ciao. Bye-bye.